there, good afternoon. Welcome to Closing Trades. I'm Snehi Shah. With me as always is Shrishti Sharma. And let's sum up the kind of day we've seen. Another hour left of trade, but the only direction we've seen the market go today is one way up. And finally, the fillip that the Nifty needed to inch above that 24,500 mark was the robust SIP data, the AMFI data that we've seen this time around. Let me just take you through what those numbers look like. The SIP inflow has come in at 28,464 crore rupees compared to 27,269 on a month-on-month basis. Very strong set of numbers coming in. There's been a strong surge in July, and SIP inflows have hit a record high because they've come in at 1.78 lakh crores of an inflow compared to 49,095 crores on a month-on-month basis. So look at the kind of spike we've seen on that front. A very big jump coming in. The mid-cap inflows look healthy. Small-cap inflows have risen on a month-on-month basis. Flexi-cap inflows have also jumped 34% on a month-on-month basis to 7,654 crores. So these are some important numbers to talk about. But let's welcome on board Ms. Suranjana Borthakur, Head of Distribution and Strategic Alliances at Mirae Asset Investment Managers. And Suranjana, hi, good afternoon, and thanks for your time. What is your first take on the kind of AMFI numbers we've seen? Because this jump that we've seen on a month-on-month basis, help us understand what these numbers really mean, because they look very robust.
Yeah, good afternoon. I think extremely encouraging numbers in the market this month. I think we have been seeing, last few months, while January was a great month in equity inflows, but there was a steady decline that was happening after that. So there's been, I think this month has been a huge spike. We are seeing 81% upside in the equity numbers. But if we see within that, I think the largest contribution has been from the sectoral NFO side, because sectoral funds have attracted around 9,400 crores. But a large portion of that has been sectoral NFOs, about 7,400 crores out of that. I think the other categories like focused as well as small cap have seen almost a 60% upside from last month numbers. We also have seen a healthy upside in the large and mid cap as well as the multi cap category. ELSS is the only category perhaps which is continuing to see a slowdown. But to my mind, I think the hybrid segment is again continuing to look encouraging, while the total number has seen a slight drop. But if you see, the downside has actually been because of some arbitrage outflows. And arbitrage, I think, is an outflow which was expected because there's been some deployment from there. If we see in terms of the multi-asset as well as the equity savings category within hybrid, both the categories have actually doubled in terms of numbers from last month. I think even the aggressive hybrid has seen about a 78% upside, as well as the BAF category has seen an upside. So very encouraging to see the inflows in the hybrid segment. I would think even in the ETF, the other ETF segment has seen from a 800 crores to about a 4,000 crore inflow. So I would think the broader indices have also got some healthy flows there. In the debt part, if we see, I think that's again, it was negative in the last couple of months. And this month we see a positive flow of about 1 lakh crores, and major part of it being the ultra short and the low duration category, as well as money market category, while liquid and overnight continue to get inflows, but these are the other categories which have got flows. I think the SIP numbers are very, very encouraging. I think, that 28,000 mark has been something which is only looking up month on month. I think it talks about the maturity of the investor base. I think what is also happening is, the financial awareness that has happened, perhaps the digitalization, which is what is making the accessibility of investments easier, and also, of course, the market confidence continuing. I think all these factors are contributing towards building a very robust SIP book. And this has been a pattern we've been seeing in the last few months, and I think it's only been building stronger. My only request to investors would be that in sectoral categories, when this is a surge we had seen in the last few months before, I think before January, I think we saw about like a 15,000 crore inflow which was happening. There was a lot of chasing of returns which was happening. So if the risk of the investment is kept in mind and is invested for the right reasons, then great investment to continue. But I think we need to be aware of what the products are and what we are investing into in terms of quantum of investment.
But Saranjana, yes, of course, the SIP number is really encouraging, and to be precise, it's 28,464 crores versus 27,269 crores on a month-on-month basis. But Saranjana, given the strong trend that we have seen in this number, good to believe that this year end could be very close to that 30 or 1,000 mark?
Yes, I think I mean, while I don't want to make any predictions, but I think we are moving in the right trajectory. We could be past that mark actually. If we look at the total inflows, I mean, last year, if you see, almost 2,89,000 crores flowed into the SIP side, and this year we are already past 1 lakh crores. So I think the flows have been only getting stronger. So I think crossing the 30,000 could be any time now. Month on month, we are seeing such a healthy jump which is happening. So I think the majority of the investor plays out here, and I think it's also about the experience that they're getting. I think conviction only builds over a period, and we are in a sweet spot. We've been seeing that there are so many things which are happening globally, so much news coming in. But look at the resilience of the market. I think that is something which is also playing in the minds of investors, that markets have been extremely resilient. Even today, we've seen that in spite of so much that has happened globally, we've seen only an upside in the market. So while using the opportunities of correction to invest more is great, but a systematic investment makes all the more sense in the long term.
Okay, Suranjana, thank you so much for your time today. On that note, we'll let you go. Thanks once again for chatting with us about the kind of numbers that we've seen coming in on the mutual fund front. The SIP numbers are looking very good. So clearly that 6 week of dip that we've seen in the market, that has been bought into via SIPs, via flexi cap funds, via mutual funds. So all of this is looking positive, which is why we've seen such a sharp spike coming in on a month-on-month basis for the AMFI data. But let's move away from that and once again shift the spotlight to the market, and let's revisit where the market is at right now, because we've seen a good one-way up move coming in on the market and above 24,574. In fact, very close to 24,600 is where we are at, about 100 points higher from the day's low. So looking good for the Nifty right now. You have sensex that's holding up well. Nifty Bank also a very good move. The big winners today is Adani Enterprises up 5%. Tata Motors continues to hold its ground. Trent, Eternal, Grasim, SBI, all of them are doing well in today's trade. Let's welcome on board Mr. Chakri Lokpriya, Chief Investment Officer at LGD Wealth, who's joining us on the fundamentals. Chakri, hi, good afternoon. Thanks for your time. Give us a sense of the market move that we've seen today. Do you believe that this was naturally the next course for the market given the kind of consolidation we've seen, or do you think this up move had a lot to do with the kind of AMFI data we've seen earlier today?
Good afternoon. I think, there are two or three different reasons why. One is, of course, we were waiting so long for whether a finality on Trump tariffs. And now it's clear that the number is actually 50%. And, and so that is one. So there's some amount of, at least the uncertainty has gone away. The second is now there is an expectation that the US-Russia trade talks would rather help in stopping the war and therefore help India purchase oil. Now, if that does not come about, or if that event is not connected or becomes disconnected to India's tariff by the US, then clearly there is some weakness. So I think the market is assuming that if US-Russia come to agreement, then the extra 25% goes away. But that may not always be correct. We don't know the answer. I think, these are the two reasons. One is a relief, but clearly if the 50% stays, then the hit to the GDP is about easily close to a 35 basis points to 1 percentage point.
Interesting. Chakri, what we have in our hands, though, is the earnings season. How is it that you've read into SBI, or for that matter, even our Muthoot and Manappuram earnings? Because the MFI segment clearly seems to be under pressure across the board. But what is it that you picked up from SBI's commentary?
SBI numbers were good, and both their loan growth and deposit growth are good in terms of, compared to the rest of the banking industry. And the company recently concluded its QIP, and therefore it's extremely well capitalized. In view of this latest Trump tariffs, therefore the focus by Indian government would be more on the infrastructure, and therefore the lending by SBI would be a primary beneficiary and other PSU banks. It's at a very favorable valuation, so I clearly would buy an SBI.
Right, that's about the banking space. And yes, of course, SBI has maintained that leadership position since the start of the day and still holding on to the gains of almost 3%. But Chakri, the other space that is looking very good is actually the cap goods space. And I just wanted to talk about L&T because once again, a fresh order inflow of over 15,000 crores coming in for the company, and this one is from Adani Power. But I remember a couple of weeks back as well, we had that similar announcement of over 15,000 crores of order win. The earnings have been good. How do you see L&T, and do you still believe that if one really needs to invest in this volatile times, L&T could be a very good bet?
Whether it's L&T or Kalpataru or Nagarjuna Constructions, that whole space, I think, will kind of benefit from the current situation because, Indian government would need to shore up growth, and where they can do that is by expanding the spend in infrastructure. And these companies are the natural beneficiaries. You look at, for instance, L&T's numbers were quite good. You look at Kalpataru, which reported a couple of days ago, very strong growth. So I think that trend for the industrials as a segment will continue.
Right, okay, that's the take coming in on what you're seeing from within the infra space. Just quick status check on what the market is up to, and clearly some of those EMS and cap good plays, they've been under pressure from the word go, led by, of course, PG Electroplast, which is still down 13.5%, 6% lower for Amber. There's Voltas also rumbling under pressure, about a 4.5% downtick coming in there too, and Blue Star, which is also feeling the heat, down 2% as we speak right now. The rest of the market, of course, is showing a fair amount of buoyancy. We're pretty much around the session highs. We're headed in for almost a 200-point gain. Paytm, Adani Enterprises, Supreme Industries, Policy Bazaar, TI India, Trent and Tata Motors, they are your big winners today. We'll continue tracking markets with Chakri Lokpriya on the other side.
Persisted for some dealers as they were expecting a strong summer season, and that has not happened this time around, which is why a lot of inventory overhang exists in these channels right now. Also adding to that is weak numbers coming in from Voltas over the weekend. It's a very weak set coming in, a miss across all estimates. So let's take all these factors one by one and understand what is hammering this entire sector down today. First up, PG Electroplast, that PAT was down 20% year on year. They've cut their revenue guidance to 18% from 30% earlier, also trimmed their EBITDA guidance. Their capex guidance has been trimmed by a whole lot, and they've refrained from sharing the FY27 guidance, which is why PGEL is battered in today's trading session, as was the case on Friday as well. Coming to Voltas, weak set of numbers coming in. Their PAT is down 58% on a year-on-year basis, and the management commentary, they've said they expect FY26 industry growth to be flattish, only between 5 and 10%. And Blue Star, when we interacted with the management last on the kind of inventory they have and the kind of cuts they've seen in their production, they put that figure at 20% in May and 25% cut in June, which is why Q1 has been hampered for Blue Star as well. They aimed to grow 25 to 30%, but ended up growing only 5% in April, which is why the whole quarter was marred for them, and they expect a reduction of 5 to 10% for overall FY26 estimates or compared to their earlier estimates. So if you take a look at these stocks from their 52-week highs, PGEL is lower by 52%, Voltas is 36% lower, and Blue Star is 27% lower. So big cuts coming in across the board. In fact, we also interacted with the management of PG Electroplast to understand what has acted as their biggest headwind in the quarter gone by. Let's go across and listen in. Okay, we'll go across and listen into that in some time now. But well, yes, these are all the big factors that the managements have been blaming, and the festive season up ahead could be a potential fillip, but only time will tell, Shrishti.
Well, indeed. These are the stocks that are definitely hammered in today's trading session. Well, of course, we have seen a very sharp downfall in all these counters and no substantial recovery from the day's lowest point. But with this, let's move on and let's connect with our technical experts then. And we have Ruchit Jain with us, joining us from Motilal Oswal Services, as well as Aditya Agrawala is also here with us. A very good afternoon, gentlemen, and thank you so much for your time. And firstly, Ruchit, let me come to you to have your take on the benchmark indices and what a fantastic move and rather rebound on both Nifty as well as Bank Nifty. But how do you see the last half an hour shaping up? And along with that, what's your current view?
Yeah, hi, very good afternoon to everyone. Well, if you look at last one month or so, we have already seen a good price-wise correction in the markets with 25,600 being the recent swing high, and from that we are down by around 1,200 points. So I think because of this correction, the momentum readings were in oversold zone post that Friday sharp sell-off in the broader markets as well. And I think generally when we see that the momentum readings get oversold, FI's long short ratio comes around that 8-9%, and no Nifty PCR wise, no, that is also around 0.7, zero point 0.8 kind of levels. Such situations that usually leads to short covering move. So I think this is a pullback move that we are seeing. No, and on the higher side, we expect this pullback move at least for timing to extend towards 24,750 kind of level where the 20-day exponential moving averages place. So if one is looking from just a short-term trading perspective, then I believe that one can expect some further pullback towards 24,700 to 750 kind of zone.
Okay, before we take it across to Aditya as well and get in his thought on what he's making of the market right now, Chakri, what do you do with some of these white goods stocks? I mean, we all know what the issue is. It's now become a sectoral issue and not one-off company. But do you sense that come November and things would get resolved? At least that is what the management seemed to be indicating, that this is just a one-off because of the early onset of monsoon.
If you look at all the numbers, clearly they were weak. And if you look at Voltage and the numbers tell you that it's not just weak, but they also lack pricing power. So that tells you that product differentiation is not there, or rather is not enough for them to really protect their margins. So against that environment, volumes were also weak. And so now I think, while summers come and go, that's a very seasonal thing. I think volumes in general for these goods will kind of tend to be weak, at least for the next quarter or two. So I think it's best to wait on the sidelines.
Right, so best to wait on the sidelines. That's the take coming in on some of these companies which are definitely hammered in trade right now. But Aditya, what is it looking like when it comes to the technical aspect of it? Because PG Electroplast is one such significant fall we have seen not just on Friday, even today the fall continues. Voltas, Havel, they are all hammered in today's trading session. What do you make of the overall space, and do you believe that more selling pressure could be in the offing for this particular sector?
Hi, Srishri. Good afternoon. Definitely very likelihood that you will continue to see this kind of selling pressure in most of these names. And especially if you're talking about these 2-3 names that you just mentioned, PG Electroplast has already witnessed a massive correction recently in last 2 trading sessions. There could be a bit of a short covering rally because of the intense selling pressure that we have witnessed in the stock over 2 days. But again, that will be very short-lived, and my sense is stock will continue to spiral down in the coming trading sessions over a period of time, and might just test levels of 450 to about 400 on the downside. So if you're looking to enter this space via these stocks, maybe just give it some more time. I still feel that there will be some more pressure in these stocks, and same holds true for Voltas as well. If I take a look at the chart setup, looks like there will be more pain in the coming times. For the stock can slide all the way down to levels of 1100, and maybe sub 1100 is also possible over a period of time. And Amber, that too, we have seen stock has actually cooled off significantly in the past 2 trading sessions, though this could be one of the outliers within this entire space, and can see a bit of a rebound from current levels on the downside. 6500, 6600 is a good support area. But again, I would wait out some more time here also before venturing into these stocks at the moment.
Okay, so wait and watch is still the approach when it comes to this entire space. But Chakri, I want to get your view on some of these platform companies that are up in a way in today's trading session. Case in point being Paytm, that's up 5.5%. PB Fintech is up 5%. Eternal is up a good 3%. What are you making of some of these new age tech companies, and what's your view on this entire space?
If you look at these companies, if you look at Eternal, their numbers in this quarter showed an improvement in margin. Their losses narrowed in the various divisions that they run, and the volumes held up. And these sectors are largely domestic facing in nature. So I think the one investment away from export oriented names towards domestic, and given the fact that these companies are not only domestic but also have corrected in the recent past, so that also helps. And going into the festive season also helps increased amount of transactions, and therefore I think they look all right. In fact, Eternal looks strong even at current levels.
All right, so that's the take coming in on the platform companies. But Chakri, what are your preferred bets within the sector? Yes, of course, some of these companies have already seen a very good run up. But if one really has to take a view and deploy fresh money, do you find any opportunities there? Chakri, this
Yeah.
question is for you. Yes.
Yeah, I think it is financials and industrials for the simple reason that the government clearly whether the tariff rolls back, or if not by how much, whether it's rolled, we don't know the answers. So against this environment, I think it's where the Indian government will do the best it can to increase infrastructure spend, and therefore, yeah, industrials and financials, so State Bank of India, Union Bank, Canara Bank, all these banks on one side, NBFCs, and of course including the defense companies, the whole railway space, that domestic facing companies would benefit.
Okay, sure. Appreciate that view. And Chakri, thanks so much for joining us this afternoon. Appreciate your time today. Let's shift focus and get in some BTST ideas from our technical experts, Aditya and Ruchit. Aditya, you go first. Where are you placing your BTST or STBT trades for the day?
I've got a couple of them, Snehi, and both on the long side, clearly because the texture of the market is bullish. The first one is from the capital goods space. L&T looks very strong after a good set of numbers. Stock had posted a good up move. After that, went into a consolidation. We're witnessing good pullback move in today's trading session as well. So at current levels, I'll be a buyer in L&T for a target of 37.50 on the upside. The stop loss at 3600 on the downside. The second stock is from the banking space, and clearly PSU as a space is outperforming. So Canara Bank is on my list. Looks very interesting. Can test upper end of the downward sloping trend line, which happens to be around 116 odd levels. So with a stop loss around 105, I will be buying in Canara Bank for a target of 116 on the upside.
So that's the buy call coming in from Aditya. But Ruchit, what about you? Which are your bets right now?
So Eternal would be my first bet, where one can create fresh long positions. In fact, if you look at some of the newest technology stocks such as Paytm is there, Policy Bazaar is there, Eternal is there. These are some of the names where we can clearly see the volumes are quite high, along with the price up moves. So we believe that there would be short-term outperformance, considering stocks such as Eternal has even not seen any kind of price-wise correction when the overall markets were correcting in the last 1 month, and the 20-day MA has been also acting as a good support for the stock. So Eternal one can buy with stop loss below 300 for potential targets around 322. And I'm recommending one of the PSU bank as well. So one is Indian Bank, which we are focusing on the long side, since the stock has given a breakout from its consolidation. It is only one of the PSU banking space which is trading around its all-time high level. So clear relative outperformance within the sector can also be seen. So Indian Bank can be bought at current levels with stock below 658 for potential targets around 680.
So Eternal and Indian Bank are two stocks that have made it to Ruchit's radar this afternoon. But let's also talk about another stock in focus. It's ICICI Bank, because the bank has hiked the average monthly minimum balance for new savings accounts in metros and urban areas to 50,000 rupees now from 10,000 earlier, with changes to balances in semi-urban and rural branches as well. Existing customers, they continue to remain unaffected. Let's listen in to what the RBI Governor Sanjay Malhotra had to say on this as we slip into a short break.
मिनिमम बैलेंस की जो बात है, जो मिनिमम बैलेंस का जो आप बात कर रहे हो, वो उसके अंदर में रिजर्व बैंक ने सभी बैंकों के ऊपर में छोड़ा है कि वो किस प्रकार का मिनिमम बैलेंस वो रखना चाहते हैं। तो अब किसी बैंक ने 10,000 रखा है, किसी ने 2,000, कईयों ने माफ भी किया हुआ है, लेकिन ये रेगुलेटरी
Back with closing trades right here on ET now. Not bad at all. While the markets have been in wait and watch mode, this Monday at least is seeming to be quite positive. We are holding a good 180 points higher right now in trade, or actually 200 plus now when it comes to the Nifty spot for the futures as well. We're scaling at the high point of the day. It's really a lot of these mid-cap companies, other than, of course, the likes of Adani Enterprises, Tata Motors, Trent, Eternal, and SBI, which are showing leadership amongst the large caps. But the breadth of the market is what is much more impressive. While, of course, you have the white good companies which are crashing. But look at a Paytm, that's holding up 5.5% right now. Supreme Industries, Policy Bazaar, TI India, all of these stocks are also holding up very smartly. Let's take our conversation forward, and we've got Ashi Anand from IME Capital joining in on the show right now. Ashi, hi, afternoon. You track some of these new age tech companies quite closely, right? Paytm, Policy Bazaar, etc. What do you make of the earnings that they've delivered so far?
Yeah, hi. Firstly, thanks for having me on the show. And I think in what has otherwise been a fairly bleak earnings season, new age digital platforms have clearly kind of stood out in terms of the earnings that they've delivered. Be it a Paytm, which has achieved profitability, I think, well ahead of what people were expecting. You've also seen kind of Blinkit and Instamart. You've seen kind of in quick commerce a space where investments were expected to be elevated. I think you have seen some level of peaking of quarterly losses, again ahead of market expectations. And you've seen the kind of move that Eternal has seen after the results. I think at the time when we had launched our digital disruption fund, we had been very clear around the aspect that markets and people were very clear about the longer term growth runway on these companies and the fact that they can grow at rates which are much stronger than others. However, what was possibly not as clear was the fact that the inherent business models are actually not just profitable, but highly profitable. Now, quarter after quarter, as these companies are continuing to outperform kind of street estimates in terms of profitability, a lot of people are now starting to understand and factor in the fact that these companies can be quite profitable over the longer term. We have actually, and we had done this at the time when we had launched the fund, when at that point in time, most of these companies were still making hundreds of crores of quarterly EBITDA losses. We had kind of projected out profitability and margins over the longer term, and we have earnings models that go into 30 and 32. What happens is actually very, very interesting. As these companies achieve a certain level of maturity, they continue to be able to grow without having to invest as much in customer acquisition, in getting customers to transact more, etc., because customers get that much more embedded onto their platforms. A very large part of their cost structures are actually linked to this hyper growth phase. Some of these costs can actually come down on an absolute basis as you no longer have to spend as much to acquire or incentivize customers to actually transact. A fixed cost base which is largely stagnant and increasing revenues leads to a lot of room for both operating and financial leverage to play out. And at least what our models show very clearly is that the longer term profitability of these companies are very, very attractive, and they also generate very strong free cash flows. The combination of the sheer scale that is coming driven by the hyper growth and kind of very healthy profitability is a very, very strong recipe for kind of value creation. And I think that is why it's not just over the shorter term, but we have repeatedly on this channel and others been indicating that we believe this is going to be the decade for digital platforms. And at least the results that we're seeing so far are quite kind of encouraging for that trend.
Indeed, that's about the take coming in on some of these new platform companies. But along with that, one of the other stocks that is since the start of the day has been holding itself, being one of the top gainers on the Nifty 50, and that's Tata Motors. Because this time around, in terms of the earnings, though we have seen a mixed bag, the profits was higher versus the estimates, while the revenue was in line. But there was a slight miss on the margins versus the estimate of 10% on the consolidated front. But despite this fact, the stock is is up around 3%, and all thanks to the JLR EBIT margin guidance that has been maintained to 5 to 7% for the full year versus 4% what the company has reported. The double-digit margin in the commercial vehicle continues, though for the passenger vehicle, the numbers were not that great, but the commentary stands tall. But in terms of the brokerages, it was DAM Capital that has gone ahead and upgraded the rating on Tata Motors to a buy now and marginally raised the target price too from 750 rupees earlier to 775 rupees. They're saying that any demand recovery would be the key trigger for margins and valuation expansion. They've largely maintained their estimates, the valuation and the fair value for each of the businesses. But this target price hike of 25 rupees, that's on account of translation effect of JLR financials into INR reporting, and because of that we have seen great moves on Tata Motors, still holding strong. 3% uptick is what we have seen. But Rashi, we just wanted to have your take on Tata Motors. The business and the JLR division has gone through a lot of late, be it the kind of uncertainty due to tariff, the demand slump in some of their key geographies, and given the fact that the valuations, they have corrected sharply and the stock is almost half from its all-time high. Do you believe it's a good bet and an attractive bet to enter once again into Tata Motors?
Motors is clearly interesting, right? And I think there's one part of the call which is relatively quite easy to take. The domestic business is doing reasonably well. On passenger vehicles, I think over the last 3 to 4 years, you've seen a great kind of launches by Tata Motors. They've been able to kind of gain market share. And even in terms of the positioning, in terms of electric vehicles, and which is where the kind of future is moving towards, I think the domestic passenger vehicle business seems very well placed. On CV, that is a duopoly between them and Ashok Leland. I think they managed to capture lost ground there. So the domestic part of the business is, I think, the easier call to take, and that clearly does have a certain amount of value. What is actually quite challenging in this, you've seen a lot of fluctuations in margins on the balance sheet health, demand across trends, etc., is what really is happening on JLR. Now, JLR is clearly there are a couple of very strong brands. But if you just understand what's happening from a global tariff, and that does impact the North American market, which is quite important. The other element is really China and Chinese demand. BYD has become a very important threat over the recent years. Now, this does impact JLR's positioning in kind of China, but you also now have to contend with another emerging competitor in your other developed markets. I think from a longer term perspective, JLR's competitive positioning vis-a-vis the BMWs, the Mercedes, both of them are actually further ahead on electrification than a JLR is. And there are kind of investments that need to be made to catch up on those investments. So I think what happens is getting an accurate valuation on JLR is that much more challenging. And that is really what's causing these fairly large fluctuations in the share price. Given the fact that the share price has fallen quite significantly, it may seem actually quite attractive, but the key call is how are tariffs going to emerge and what happens to kind of global demand, because that's going to be very dependent, very important for kind of the stock price going forward.
Rashi, you're saying avoid Tata Motors till you have clarity on tariffs?
Once you have some clarity, not so much on it's going to be more kind of relative tariffs, right? As in for Tata Motors, what's going to be important is going to be the US's tariff on the UK, and also what would impact is kind of versus other like US-China tariffs, etc. You need to understand the relative tariffs globally as compared to the US-India tariff, which is what's important for most other companies in India. I think once you have clarity on that, and you also need clarity on global demand. I think once you have clarity on both of those, the recent quarter earnings were clearly encouraging in terms of profitability. So if as some of that kind of emerges, it becomes a much easier bet to take. But I think given the fact that it's fallen quite significantly off the highs, buying even today may not be that bad an idea.
Okay, that's the take coming in on Tata Motors. But Aditya, weigh in with your view on the charts for some of these four-wheeler counters that we've seen. Case in point being Tata Motors, M&M. How are some of them looking vis-a-vis? How are the two-wheelers shaping up on the charts? And between both of these pockets, which one is looking more attractive?
Currently, if you ask me clearly from a risk-reward perspective, two-wheelers do stand out, and they look attractive. And given the fact that it's more of a domestic focus, and because of all the monsoon coming out good this year, you see that kind of traction in all of these two-wheeler space. So talk about Hero Moto, TVS Motors, and Bajaj Auto for that matter. All three stocks look interesting to me, with TVS Motors being the top bet here. And it shows on the price as well, that has been constantly outperforming. If I have to pick between two-wheeler and four-wheeler, I will stick to two-wheelers with TVS Motors being the top bet here. For a target of 3,400 on the upside, I would be a buyer here. Hero Moto for a target of 5,000, again, I would be a buyer here. Within the four-wheeler space, again, Mahindra stands out completely because that is one stock which has constantly been making higher highs, higher lows, and that is one stock that I think will continue to do well in the coming times as well. So this can also be bought in the four-wheeler space for a target of 3,400 on the upside. And talking about Tata Motors, if somebody actually has a longer time duration, maybe a year or so, or maybe slightly more than a year, I think Tata Motors definitely offers a compelling risk to reward ratio at current levels. And I would like to allocate some part of my money in the portfolio to Tata Motors and just leave it for about a year or so. And then I will definitely see levels of 750 to about 800 after a year or so.
Right, okay, that's the take coming in at Tata Motors. But look at what's happening within the healthcare space. And look at a Fortis, for instance. It's currently at an all-time high, up by nearly about 2% in trade. In fact, not just Fortis, but the rest of the pack as well has been holding out very, very smartly. Aditya, let's run some of the checks on a Fortis, Apollo, etc. Max too. Most of these stocks are sitting at their all-time highs. Do you think still some scope or still further headroom you sense on the charts?
Absolutely, Aisha. In fact, this is one space which has stood tall while markets were in a bit of a turmoil phase recently. And like you mentioned, Fortis trading at an all-time high. And my sense is the stock is continuously going to witness an up move even from here on. Though it's a steady up move, you can't really trade the stock. It's a slow and steady progress, as you would see on the charts as well. My sense is you should add the stock on every decline. Close to about 850, 800 is a very strong support for the stock. Add in tranches the stock in your portfolio, and we're looking at a target of 1100 on Fortis. Apollo Hospitals also looks very strong on the chart setup after a bit of a correction in the stock recently. Stock is again headed higher, and our sense is stock will test levels of 8,000 if you hold it for at least 6 months to about a year. And Max Health also looks interesting here for a target of 1400. This can also be looked at. And one more space that can be added to this is the diagnostic space that has also done really well for itself. And likelihood this is going to continue to see an uptick from the diagnostic space. You have DBs, you have Dr. Lal Path that looks very interesting, and Krishna Diagnostics and Yatharth. These are the three stocks that definitely stand out.
Well, that's about the technical picks right now when it comes to the healthcare space. But one such stock within the pack is Apollo Hospital. That is going to be in focus on the back of the upcoming earnings. And this time around, we are expecting a good set given the fact that the hospital as well as the pharmacy business both are expected to see a double-digit growth, especially in a quarter which is expected to be a seasonally weak for the hospital space. Talking about the numbers on the revenue front, we are expecting a jump of 13%. EBITDA expected to grow 19% on a YOY basis, while margins are expected to be steady at 14% odd. The profit number expected at 393 crores, and that will be a jump of 29% YOY, but absolutely flat growth on a sequential basis. But apart from the numbers, all eyes will be on the progress made on the margin improvements, especially in their online pharmacy division, the progress on adding new hospitals in different geographies, what the company has been talking about with respect to their capex. And even today, in good market move as well, the stock is holding on to the gains of 2% right now. But Ruchit, quickly, if you can help us highlight the levels to watch out for when it comes to Apollo Hospitals.
Yeah, so the overall trend has been positive for the stock. We have seen some dip from the recent highs, but the stock is also still holding well above its 200-day moving average support, which is around 7,000 to 6,900 range. So I think till this support range is intact, I think this dips a good opportunity to buy into the stock. So 6,900 to 7,000 is the short-term support which needs to be held.
That's a take on Apollo Hospitals on the charts. But Ashi, barring Apollo Hospitals, the last two Nifty companies will also be coming out with their numbers tomorrow, and that's Hindalco and ONGC. Both on the commodities front, both have their own set of global factors at play. Where do you peg these numbers could be in terms of just a rough sense on how the quarter gone by could look like for both of them?
So without going specifically into kind of quarterly estimates, let me just give you the broader outlook in terms of the commodity space. This is a space which is aren't very active at on because we kind of prefer buying companies with kind of secular growth potential, which have the ability to grow year on year. Commodities driven by kind of a global commodity cycle. You miss this kind of longer term compounding. You have to get your time of entry and exit kind of quite right, timed in line and being contra to what's happening on the global commodity cycle. I think a core element before one gets bullish on kind of any kind of global commodity, it is important to understand that you are in this kind of unprecedented environment of increased kind of tariffs by the world's largest economy. And this is likely to have some kind of a repercussion on a global slowdown. Now, in an environment where you're kind of having kind of demand potentially coming off across some of the major global economies, it becomes a bit difficult to actually take a strong favorable call on any major global kind of commodity. The other important element here being for the past couple of decades, China has been a major delta growth driver in terms of demand for global, for be it metals, be it oil and gas, across all kinds of commodities, with the Chinese economy kind of not in the healthiest zone. Demand is something which I don't think we're seeing a lot of robustness on, and accordingly, by and large, it's a space we're not very active on.
Okay. So, Ashi, I wanted to ask, since we're at the fag end of the earnings now, anywhere based on earnings where you've added positions or reduced, any tactical changes that you may have made or even long term for that matter?
So we were kind of quite hoping to be able to use the earnings season to identify areas where growth is kind of coming back. Unfortunately, that is not something which is very visible. By and large, across most sectors, you are seeing kind of growth being quite muted. Now, in the context of this kind of overall global uncertainty around what's happening with tariffs, and I think more importantly, a relatively weak earnings season that we've gone through, we have actually tactically increased our cash holdings a bit. We believe if there is some amount of volatility, we do want to have the ability to actually take advantage of that to be able to buy and build certain positions that we are looking at. But I think the major change that we've really made over the coming result season has been actually generation of small amounts of cash to be able to take advantage of any tactical opportunities. But just by and large, I think results have been quite muted, and we're not yet very clear which sector is going to drive the kind of growth recovery going forward.
Seems like we need some more time, some more visibility to understand the clear winners and losers as expectations have been muted and so have been the overall earnings. Not all that great, but not all that bad either. But let's shift focus from equities and talk about macros as the street awaits inflation data numbers to be released tomorrow. Let's take it across to my colleague Varun to check what the polls are indicating on the same. Where are we pegging this number to come this time around, Varun?
Definitely. So one more month wherein you're seeing a declining inflation, because this would be the 9th straight month wherein you're seeing the decline in inflation. And this time the CPI numbers as per Reuters poll is expected to come at around 1.76%. Now, this would be actually 6 straight months wherein the CPI numbers would be below the RBI threshold limit or the comfort level of around 4%. And definitely this time it is going to be below 2.1% that has come in last month. So this time it's going to come at around 1.76%. Now, there are several factors which are actually impacting the overall CPI number. If you look in last month, there was urban as well as overall rural inflation which were actually declining. We are expecting it to decline in this month also. And also the overall food inflation, that has been something which has actually led to the decline in the overall inflation. And also for the month of July, we are expecting the overall food inflation to actually decrease, and especially it is a vegetable inflation which is actually on a declining trend, and that is going to impact the overall CPI numbers for the month of July as well. Also, if you look at the core CPI numbers, it is expected to moderate to around 4.22%. So one more month when you're seeing a decline in the overall CPI numbers, the Reuters poll say that it is expected to come at around 1.76%, which is actually a straight 9th month where you're seeing the decline in the CPI numbers.
Okay, that's that in the CPI numbers. But we also had a very interesting chat with Nilesh Shah from Kotak AMC as to what he likes in terms of sectors right now. He also mentions that the focus is on the domestic story rather than ones with global exposure. Listen in.
As a Kotak mutual fund, we believe the domestic consumer discretionary story is something which will get supported by tax rate cuts, EMI burden reduction, potential GST rationalization or petrol diesel price cuts, and finally eighth pay commission coming into play. This will be across hotels, tourism, airline, home improvement, and all those kind of sectors, which is more domestic driven. Some of this money will also be saved and not spent, and hence financial services is something which one can look upon. Clearly, we are more focused on domestic stories than global stories. We are more focused on bottom-up stock ideas and betting entrepreneurs. In many sectors, the growth will still be good, though the valuation could be a challenge.
Okay, that's the word coming in from Nilesh Shah. His strategy going ahead and focusing more on domestic than global, and bottom up is the approach. But on that note, let's start winding down for the day. Ashi, Aditya, as well as Ruchit, thanks for your time. And let's hand it over to my colleague Ashesha, who's waiting by with a roundup of the trade.